A guide to building a comfortable retirement, securing your golden years. Retirement is a time to relax, pursue your passions, and enjoy the fruits of your labor. But how can you ensure a financially stable and fulfilling retirement? In this video, we'll provide you with essential insights and practical strategies to help you plan, save, and invest wisely so you can build the retirement of your dreams. Get ready to take control of your future and embark on a journey towards a comfortable and secure retirement. But before we begin, please like and subscribe to our YouTube channel for such amazing and informative videos. 3. Create your own retirement budget. Creating a budget is indeed crucial for any salaried individual, especially when planning for retirement. It allows individuals to gain a comprehensive understanding of their financial situation and helps them make informed decisions about their expenses and savings. By developing a well-structured budget, individuals can effectively manage their retirement funds and ensure a comfortable and secure future. When constructing a retirement budget, it is important to consider both fixed and variable expenses. Fixed expenses include major financial obligations such as mortgage payments or rent, home or renter's insurance, and monthly property taxes. These expenses provide a foundation for budget planning and must be factored into the retirement budget to ensure stability and meet essential needs. In addition to fixed expenses, individuals should also account for variable expenses. These include costs that can fluctuate from month to month, such as clothing, food, and transportation. It is crucial to assess and estimate these expenses realistically, taking into account potential changes in lifestyle and spending patterns during retirement. As individuals age, it is natural for health-related expenses and other major costs like home repairs or renovations to increase. To effectively plan for retirement, it is essential to anticipate and include these potential expenses in the budget. Health expenses can include insurance premiums, medications, doctor visits, and potential long-term care costs. By accounting for these costs, individuals can ensure that their budget is robust enough to handle unforeseen circumstances and adequately address their healthcare needs. Moreover, by creating a detailed budget, individuals can effectively combat inflation during their retirement years. Inflation erodes the purchasing power of money over time, which can significantly impact one's financial stability in retirement. By considering the potential effects of inflation and adjusting the budget accordingly, individuals can ensure that their retirement funds will be sufficient to cover future expenses and maintain their desired lifestyle. 2. Create a retirement income plan. Achieving a balanced budget in retirement requires a careful examination of income sources. One of the most effective ways to ensure a continuous flow of income after retirement is through a pension plan. A pension plan, also known as a retirement plan, is an investment vehicle that allows individuals to allocate a portion of their income over a period of time, accumulating funds that will provide a steady income stream during retirement. While personal savings are important, relying solely on savings may not be sufficient to sustain a comfortable retirement. Savings can be subject to unexpected expenses or financial emergencies, which could deplete the funds rapidly. By securing oneself with a pension plan, individuals can establish a reliable income source that is specifically designed to meet their needs in retirement. A pension plan typically involves contributions made by the individual during their working years. These contributions are invested in various financial instruments, such as stocks, bonds, or mutual funds, with the goal of generating growth and returns over time. The accumulated funds in the pension plan are then utilized to provide regular income payments to the retiree after they stop working. Having a pension plan offers several advantages in retirement planning. Firstly, it ensures a steady flow of income throughout retirement, providing individuals with financial stability and the ability to cover their living expenses, healthcare costs, and other financial obligations. This regular income stream can alleviate concerns about running out of money and allow retirees to enjoy their retirement years without constant financial worry. Secondly, a pension plan offers the benefit of tax advantages. Contributions made to a pension plan are often tax-deductible, which means individuals can reduce their taxable income during their working years. Furthermore, the growth in returns earned within the pension plan are typically tax-deferred. allowing the funds to accumulate without immediate tax implications. Taxes are generally paid when withdrawals are made during retirement, at which point retirees may be in a lower tax bracket, potentially resulting in reduced tax liability. Additionally, pension plans often provide options for beneficiaries to receive benefits in the event of the retiree's passing. This ensures that loved ones are financially supported even after the individual's retirement. These survivor benefits can offer peace of mind and provide financial security for dependents. 1. Beware of inflation. When planning for retirement, it is crucial to consider the impact of inflation on your savings. Inflation refers to the general increase in prices of goods and services over time, which reduces the purchasing power of money. It means that the amount of money you have saved today may not be sufficient to maintain the same standard of living in the future, especially over a period of 25 to 30 years. To ensure a secure future, it is important to account for inflation in your retirement planning. This involves estimating the rate at which prices are likely to rise and adjusting your financial goals and savings accordingly. By doing so, you can strive to maintain your purchasing power and meet your financial needs throughout your retirement years. To combat the effects of inflation, it is advisable to save and invest in avenues that have the potential to generate returns that outpace inflation. Simply relying on traditional savings accounts or low-yield investments may not be sufficient to keep up with rising prices over the long term. Instead, consider investing in assets such as stocks, bonds, mutual funds, or real estate, which historically have the potential to provide higher returns. Investing in a diversified portfolio can help mitigate risk and increase the likelihood of achieving higher returns. It is essential to carefully assess your risk tolerance, financial goals, and time horizon when selecting investment options. A balanced approach that includes a mix of assets with different levels of risk and potential returns can help you navigate market fluctuations and inflationary pressures. Another important aspect to consider is reviewing and adjusting your investment strategy periodically. As you approach retirement, it may be prudent to gradually shift your investment allocation towards more conservative options to protect your savings from potential market downturns. However, it is still important to maintain a balance between conservative investments and those that have the potential for growth to counter the impact of inflation. Moreover, it is crucial to regularly monitor and reassess your retirement plan as economic conditions and inflation rates can change over time. Reviewing your plan annually or in consultation with a financial advisor can help ensure that your savings and investment strategies remain aligned with your goals and adjusted for any shifts in the financial landscape. By factoring in inflation and pursuing investment opportunities that have the potential to generate higher returns, you can enhance the likelihood of maintaining your purchasing power and financial security in retirement. It is important to stay informed, be proactive in managing your investments, and seek professional advice to make informed decisions that best suit your individual circumstances. Did you learn something new today that you didn't know before? We hope you did. So, if you're interested in learning more amazing tips and strategies, make sure to subscribe to our YouTube channel and hit the bell icon to get notified by our new videos. Please like and share the video. Don't forget to comment down your views on this. Thanks for watching till the end.